Hello, it's Thursday the 27th of June. We are heading into Asian trading on the 28th of June on Friday, which is a big options expiration day for Bitcoin and Ethereum. We've got, I think, almost 7 billion in Bitcoin options and 3.5 billion in Ethereum options due to expire at 8 a.m. UTC, which is pretty early in the morning. Also tonight we've got the big American presidential debate. I don't know if that's going to be a market mover, but certainly a lot of people's attention are going to be looking that way just to see if we get any curveballs from it. But what about this option expiration? Well, quite often you'll see price pinned or you'll see counter trend moves going into big option expirations. And you can also see if the market starts moving really volatile moves, because market makers which have sold the options, which have hedged those positions, have to buy or sell significantly more, which means that the markets, if the price is moving, which means the markets can see much more volatile moves than normally. So I'm just going to say, be very careful about, like, it looks pretty good for Bitcoin to break higher at the moment. Certainly ETH is outperforming and looks really good to break higher, but just be a little bit careful. And also we can see quite often with really big, this is really a quarterly expiration, not just a monthly expiration. So with this kind of size, we can see really, really big volatile moves if stuff happens to start moving. And afterwards, we can see some pretty big moves. So we've got a lot of notional size expiring. I think at the moment I read that 25% of the options are in the money, which is quite interesting. That certainly doesn't happen very, very often. So yeah, just buckle up, be careful with leverage, and have a plan. That's all I'm going to say. And after this options expiration, we could potentially see a little bit of a move. So the key question is going to be, obviously, which way is it going to be with everything that's going on? Let's take a look at where we are in Bitcoin on the weekly chart. So on the weekly chart, we are holding very nicely this 60,000 level, which is also, if in terms of fib retraces, let me get this back in the screen. Sorry, it's still with one arm. So from the low in November 2022, we are holding very nicely this 236 fib level on a weekly basis. We've had a little bit of a look under it on the daily, but the weekly closes do matter, and we've held it. So a close underneath, for me, underneath this 60,000 level kind of opens us up for a little bit of a bigger pullback and a little bit of a correction. There's no question in my mind that this sideways price action is corrective. It's not a major top or the start of a new downtrend or anything like that yet, but it's just a question of, is it over? You know, when I look at the weekly momentum, you know, I kind of feel like perhaps we're not quite there yet. And so it's a little bit troubling to get too excited about a bigger move. What I also don't like is, you know, whenever you've got all of your moving averages, and here on the daily, we're underneath the daily in 2050, and they're kind of, the daily 20 and 50 are kind of set up bearishly. And so you can see, normally when that happens, the first time back to them, you tend to get knocked back. So when I look at this, if we do rally from this 60,000 level and we do see a big move higher, then I think that back to this mid-range in this daily 50 is likely to be the first target. And it's also pretty interesting, you know, if we just look left, it's a really interesting kind of support and resistance level, isn't it? 66,500 then would be my first upside target if we can break out of this little sideways range we're in. And then at this level, I would expect a bigger pullback, either another swing lower, or potentially, you know, quite a deep retrace before we find our feet, if we are indeed bottoming and going higher again. So if we break out from this sideways range, if we look at it on the 4-hour, if we get a nice 4-hour buy, break out above this 20 moving average, that really is kind of where I'm looking, and that would be my first target. I'm a little bit reluctant to call this a bottom, yeah, I have to say. And I kind of like ETH a little bit better, and I'll explain why in a minute. But that's what I'm looking at. Just, I'm going to be a little bit cautious, and I'm going to sit and wait and let this options expiration get out of the way tomorrow and trade the movement after that in the morning. So if you don't stay up all night watching an election debate, we could see some fireworks in Bitcoin tomorrow and ETH. Let's talk about ETH and ETH against Bitcoin. And this is why I actually prefer ETH against Bitcoin at the moment. I'm going to go out to the monthly. And when I look at this monthly chart, you know, for me, I always look like simple, really simple swings. 5 waves up usually means a trend move, 3 waves, and then I'm looking for a 3-wave move the other way. And so from the lows that we made in September 2019, we have a 5-wave rally, and this looks to me like a textbook 3-wave correction. And they're equal, the swings are equal. So if I measure from this high to this low here, project it from this high, you can see this low is exactly where we found support. So for me, if we break above these weekly, monthly sideways moving averages and out of this sideways range, I think we now bring in another bigger swing higher. And if we don't, we're still in a corrective, choppy, overlapping move lower in ETH against Bitcoin. Now, when I go down and look at this on the weekly, here we are. We're really tempting fate here above this weekly 50 moving average. And if we go all the way back, more than a year was the last time that we were trading above it. And in fact, in June 2023, when we tried to get above it, it was resistance. It was resistance when we tried it in February this year, and again when we tried it in May. And so closing above this weekly 50 moving average does really open us up to back to the top of this range and back to 0.06 in ETH against Bitcoin. It is setting up pretty nicely. We've had a big swing higher. We've taken out this previous swing high. And now if we make a higher low followed by a new high here, we can say that we've flipped the trend around, and at least short term anyway, we're on our way higher back to these bigger highs and lows at 0.061. If I look at this on the daily, you can see we are holding these daily moving averages pretty nicely here as well. My only concern is, you know, I always talk about this is, you know, 5 waves up. I think the problem with 3-wave corrections is they can often turn into bigger corrections. So bigger 3-wave corrections. So this is 1, 2, 3 before we go higher again. So again, I'm being a little bit cautious here, but I do think if you buy dips in ETH, it's setting up for another run this coming month. And that makes sense, you know, with the news of what's going on. You know, we've got all of these, the Mt. Gox selling expected to begin next month. And we've got the ETH ETF expected to launch next month. So it wouldn't be weird at all for ETH to outperform Bitcoin. You know, everyone's going to be expecting selling from the Mt. Gox, whether it happens the way people are expecting or not. So I like ETH against Bitcoin. I think that potentially we could see some bounces, but just watch out for some volatility the next 24, 48 hours. Now, there was an announcement today that Solana, I think Van Eck are applying for a Solana ETF, and Solana certainly had a really nice bounce day based on that. I would say be a little bit cautious about this Solana ETF because, you know, when ETH and Bitcoin were approved, they had for some time had futures, you know, trading futures, and there really isn't the argument about, you know, whether it's a security or not for these altcoins isn't quite resolved yet. And I'm not sure that anything else is going to get approved this side of the election in November. So are we at a pretty interesting support and resistance level in Solana? Yeah, we are. Is this potentially a 3-wave correction? If this swing is kind of 61.8 of the first swing, which we can measure, so we measure from this high to this low, project it from here, yes it is, then potentially, yes, this correction could be over and Solana could be headed higher from here. If we look at it on the daily, what's not to like? Really nice support level, really nice bounce from the 200 moving average, closed today above the 20 moving average, so that kind of could be support and should be support for another swing higher. What makes me a little bit nervous is potentially if we don't and we fail these previous swing highs, it could mean that we're going to do a bigger correction and bigger equal measured move correction. And whilst we are underneath these daily moving averages, this daily 50 is likely to be a little bit of trouble. We can see previously it's been really good support, and it works the other way. It can be really nasty resistance. If this lines up with kind of 50% back, that would kind of add weight to that trouble. And here in Solana dollar, you can see that it does line up 50% retrace of this whole swing, and the daily 50 moving average then is where I think we might hit a little bit of problem above it, above 155, 163. Again, watch for this daily 20 moving average to be support if we are going to keep going higher. A close back underneath it wouldn't be a good look at all. So buy pullbacks, let the volatility get out of the way, wait for the next kind of hourly setup, and be patient. If we look, this first swing, we went really nastily sideways before we saw this breakup, didn't we? So Solana, potentially a pretty nice bullish reversal in that one. Okay, let's take a look at some altcoins, and we've got a few to look at. Let's see where we are. Some of the altcoins are looking pretty bouncy. Just month end can be funky. Let's just get it out of the way. This is dog, not doge. Whenever I see a chart like this and you see this kind of really nice bottoming pattern, you got to say, if we get out of the weeds and above these moving averages, yeah, potentially we have finished a three-wave correction and we are on our way higher again. And this is another one, I think it was somewhere in between the 50 and the 61.8 retrace in this one. So if we look at dog, from this low to this high, we've bounced from a 61.8. Quite often you get stuck in between the 61.8 and 38.2 range. It's golden ratio zone. So what you expect is a pullback in this 50 moving in the middle here, that to be the pivot level and hold a support. If we look through the middle at this 50% level, that's exactly what it's done. So if you buy some of this dog, you're looking for this 50% to hold. It's at 0.00579. If we're going to keep going higher, and we need to close above 0.006747 to be in the next swing higher. So that's key resistance. Looking pretty interesting. In fact, quite a lot of the meme coins look pretty good. Let's take a look at some of the requests. So first one is AKT. And in this one, now let's start with the daily or the weekly. This is another one which potentially could have completed a very nice three-wave correction here. First swing, second swing. I always like to measure them, especially if they move exactly at the same place, at the right place, because it means the market's looking at that as well. So when we look at this, it is bouncing from an equal measured move level. We've made two equal swings of correction, which means if we bounce from here, we have reversed and are in a new swing if we get above the 61.8 level when we backtest it, which lines up with the daily 200 moving average as well. So there's a lot to like about that 4 level. So I do think that there's a good chance that this could bounce, and if it does, back to this 4 level will be the key test, and back to the 200-day moving average in Akash. In terms of the setup, it looks really good. What I'm a little bit worried about on the lower time frames is, so far it looks very choppy and overlapping, and potentially all we have done is just a little three-wave equal measured move correction down here. If we measure from these lows, 3.5 then could be a little bit of a worry. But if we apply those rules about holding above the 61.8, going higher, we could say that in Akash, as long as we hold above 3.19, we can say that we are still headed higher to 4, and above 4, I think that this bigger three-wave correction is over, and we should continue, hopefully, to new highs and a new swing higher in this one. So that's AKT, Akash Network. Good luck. The big test is going to be that 200-day moving average, and the first time back to it, we're likely to have a little bit of pullback before we break through it. So don't be surprised, but holding above it would be a really good look. So yesterday I looked at Fetch AI, and I'm going to look at it again and Fetch against, to look at it against the euro. So let's go to the weekly. Now the weekly and the euro against the dollar and the euro are pretty much the same thing. From the all-time lows in Fetch to the highs in 2024, we have pulled back through the fib levels. Let's put regular candles on. Bounced at each one of these fib retrace levels, and we are bouncing from this 61.8 level. So we've got that golden ratio zone. We know if we bounce from here, we could get up to the 38.2 before we see a pullback, something like this. But the key thing is to get above this 50% pivot level in the middle, which in Fetch, in dollar and euro, was really interesting previous support and resistance. And so far, haven't been able to do it. So that price is 1.64 against the euro. And at the moment, this looks like a three-wave equal measured move. So I would say not quite the bottom we need to see. And quite often when you see this, it looks like this. You get quite a deep retrace. So we need this 126, this 61.8 to hold again when we come back and back test it. Otherwise, we are still, unfortunately, in this downtrend. This has got a little bit of a bear flag look. And we could continue lower to the 786 fib retrace next, which is at 0.71. So a little bit ugly, haven't been able to break through the first time. If we see some pretty bullish moves though, we're going to look for Fetch against euro to hold above 1.64 and keep going higher to 2 next, and then that 1.64 level should become support. If you're trading against the US dollar or against Tether, here's exactly the same pattern. So if we zoom out here to the all-time lows, you can see that we're doing that 61.8. This 50% level in the middle is 182 in dollars. So if we hold above 182 and Fetch, we should see 2.2, and this 182 level should become support, and this whole three-wave correction hopefully should be over. That's what we are going to be looking for. So yeah, it's a really good place to look for a bottom, but that key resistance level is what we've got to get above to confirm it. Okay, there are a few other charts that I think are looking pretty interesting that have made very similar looking bullish patterns. So first one we're going to look at is, actually let's go one more, is render. We looked at this a couple of days ago. We were looking to see if we could hold this 61.8 level and this pretty interesting support and resistance pivot level here at 7. This is render against Tether. Now, if we bounce from here, and you can see previously how important this weekly 20 moving average has been for render. When we had this lovely bullish cross and we made the bottom back in 2023 at the beginning of the year, this 20 moving average was support. When we lost it, the 50 was. So clearly that works very strongly in this market, and this was the support in April when we lost it. Here we are sideways, and now this weekly 20 moving average now becomes really important key resistance in render. So a bounce here is where we are likely to come back and test, and at the moment we're sideways underneath it. So this previous swing high at 8.26, at the moment I think it's a really nice look, it's a really nice pattern, but I'm not going to get excited about more upside unless we can regain and hold above 8.2. And I think sometimes that lines up with the 236 fib retrace as well. That's also where we're underneath, isn't it? Still, this 236 fib from this high to this low, in fact, is also really more important than resistance. If that breaks first, I think we are more likely to take out this swing high and continue higher. So we need a daily close above 7.8, or we need to trade above this previous swing high at 8.3 for a bottom in render, but it's a really good place to be looking at for it. Another one that I've been looking at that as a request is WLT LD. Now when I look at this one, not entirely sure. On the weekly we don't have a weekly 50 moving average, so I'm always looking when we when these fib levels work really well, I'm always looking to see, is this 786 fib where we are and where we are holding? It is. And look at how these previous fib levels gave us really decent bounces. So WALD, here we are on the daily, sideways at this really interesting fib retrace level, retesting it, holding it so far. Haven't got the bullish reversal we want to see yet, so being patient with this one. We'll see. Let's see if we could just, you know, flip the 4-hour moving averages. That would be a pretty good look in this one as well, wouldn't it? So what about the meme coins? Are we going to have a nice month-end bounce? Let's take a look at some of them. As you know, I've been trading with. Now, if we start with the weekly in with. So again, I'm going to take everything off. If we go from the lows to the highs, like this, and we look at these fib levels here on the weekly, you can see that these let's put regular candles on. You can see that previously these fib retrace levels were really interesting support and resistance. We got really nice bounces from them. And here we're doing a very messy thing on the 786. In fact, we've gone beyond it. People have asked me where this 786 fib comes from. So if 61.8 is pi, 786 is the square root of 61.8, and it does work really well. But the next one below that is going to be the 786 of, is this going to be the square root of the 786, which is the 886, which I look at for support. There's also a little rule I have about head and shoulders patterns, because when a market tends to overshoot a level that it should have held, the most common pattern that you see is an inverted head and shoulders pattern. And I think that we could argue here that potentially we've got a little one here, that we may have overshot this 786 fib. We didn't do it very neatly, did we? And that potentially we have got a little bit of an inverted head and shoulders pattern here. We've got a bullish cross of our 4-hour moving averages. So we can kind of, from this head and shoulders pattern, give us a target, because if you break a head and shoulders pattern like this, your target is twice the distance from the shoulder to the head, which would be all the way up here to this 50% level at 2.9 in the middle. So maybe a little bit of a bottom here forming if we can break above from this head and shoulders pattern in width. That's what I'm looking for. I like the bullish cross of these moving averages, and that kind of fits with the Fibonacci retrace pattern you would get. We could also put our fibs the other way. So we go from this high to this low like this. If we do that, we could say, well, the neckline, just above this neckline, is this 236 fib. If we hold above that, the 236 fib, then this 50% would be a very common level where we get to, but we have a wobble level in the middle with this daily 50 moving average, and it's likely to be quite mean. And things with fib retrace levels, you kind of go level to level to level. So we can say above 2.27 to the daily, 50 would be next, and 2.76, and then above that, you know, we're cooking with gas and on our way in a nice big move higher, and potentially finished a big 3-wave corrective move in with. One of the ones I've had a lot of fun trading is Kai. Let's zoom out to the weekly in this one. Oh, here we go. Because we talked about, you know, fib levels that are working really nicely in some of these charts, and we can definitely say that about this one. Let's put regular candles on. We got really nice bounces from each of these fib levels, and they've worked really well as support and resistance. And one of the things you can say about fib levels, when you bounce from one, you can have targets. So for me, normally a 50% retrace will give you a 50% bounce and 50% retrace the other way. So from this high to this low and so on, and from a 786 fib retrace, your first target, if you get above the 61.8, which we did here, so we bounced from the 786, got above the 61.8. Your first target is the 38.2, and that's exactly what we did textbook here. Now, for me, when you bounce from an 886 fib, now that makes it a really nice trade setting up here for Kai, because when you bounce from an 886 fib here, which we're trying to do, if you close above the 786 fib level, which is at 0.61, so here we are bouncing from 0.4, this 886 level at 0.44. If we can close on the daily above 0.61, the target is the 50%, which means that our fib pattern target, or the trade between these levels, is at 1.09. So the meat in the sandwich of this trade is between these two levels. Now once you kind of do this, and once you got all the way up here, it's kind of quite hard to do. This is a market, where you can move it if you do too much. So I'm looking for a bottoming pattern here to see first resistance, or your first resistance, important resistance that you need to get above, or your first target. Short-term trading is going to be back to 0.61, and above 0.61 then we should see 1.09 based on this fib pattern, and then you'd be, this potentially this big nasty downward channel is over. But when we draw trend lines of this big channel we are in, that 1.09 would also be the top of this channel. So we know that the whole correction, so here's our 5 waves up, here's our massive correction that we've done, above 1.09 and this 50% level would say that this is over. So first target 0.61, second target 1.09, and new swing higher or moonshot comes above 1.09. Buy pullbacks, not breakouts in this.